Hey there, everybody. Happy Friday, August 30th. Can't believe we're almost ending August and summer, back to school, heading into Labor Day weekend. So, first of all, I want to wish you guys all a happy and safe Labor Day weekend, and we'll jump right into this week's market update. So, hey, the way I would describe this week's market is, we need a GPS tweaking or fixing. Have you ever taken out on a road trip and you get conflicting information from your GPS on the best way to get there? Well, I think our market, as we continue to try and arm wrestle with the recovery, is sort of like a market that is getting mixed signals from its GPS. So we think we're headed in the right direction, and then we get asked to make a left turn or a right turn, or there's disagreement on whether we're heading in the right direction or whether we should even take the risk of a shortcut, or are we really in uncharted territory. So as a result, I think just like being on a trip where you kind of think you know where you're going but not exactly sure, there's a lot of uncertainty and we're looking for direction. So hopefully the minds that are smarter than me are continuing to help us navigate that. But as the market looks for direction, it's not as simple as right way or wrong way. There's a lot that is leading into that, and as a result, that's causing some of the volatility that we see in the market. Obviously, things with Syria heating up, and that's causing a little bit of a flight to safety. So as a result, the mortgage interest rates this week have actually seen some slight improvement over coming off of their 2-year high. Yeah, 2-year high is where we'd gotten, but they are seeing some slight improvement. You got to keep in mind we're still in the mid 4% for most people, still a very healthy range, keeping homes affordable and within the grasp of many people. So it's a nice balance between too low of an interest rate creating inflationary pressures on prices and too high of an interest rate where we start affecting the ability for affordability and home ownership. So right now we're holding steady, and it's still a great time to consider. But the big elephant in the room really is going to come down to the federal government and their continued spending to keep interest rates low. It's sort of the elephant in the room that nobody's really talking about. You hear a lot of speculation about what is going on, what's going on, and there seems to be a divided court amongst most of the Fed policymakers about how, when, and where to start. A lot of people smarter than me tend to believe that the tapering is going to happen, could happen as early as the next Federal Open Market Committee meeting, but most believe that it'll start the tapering cuts on the Treasury note side, and they'll continue to bolster the mortgage-backed security side to help keep rates where they're at, to continue to help bolster up the real estate recovery and keep us in a healthy spot. The recovery for the economic picture is just not going to work unless you have a healthy real estate market. So most minds believe they're going to start the tapering on the Treasury notes, and then we'll see some continued support on the mortgage-backed securities for a little while. So we'll keep an eye on it and see how that market affects the market as we move forward. There was some great news that was released a week ago last Friday. There might be some additional hope and help coming towards homeowners that may have suffered an economic event such as a foreclosure, a short sale, or a bankruptcy, or some other hardship such as that as a result of the economic downturn, with FHA loans shortening their waiting period. Now, there's still going to be some caveats and some things that you would have to prove and some criteria that you'd have to meet to be eligible, but it should open up the pool to some people that have suffered from those consequences but have since rebounded from that, have established good credit, and shortening the waiting period from a typical 3 or 2 year period down to as little as a year in some cases. So we'll have some more information that gets released, but it is sounding like there is beginning to open up some areas of the market in that way. So market continues to be a healthy place to consider both investing and buying, and it's not too late to refinance for those that haven't yet. There's a lot of economic reasons to do so. So if we can ever help you make a healthy decision by performing some analysis for you, we're here to help. More importantly, have a great weekend, enjoy your Labor Day, and we'll catch you on the other side. Take care.